Fresh U.S. inflation data has sent ripples through currency markets. We'll break down how the dollar reacted to the latest CPI report and what the euro chart is telling us about the broader story. We'll also look at the tech sector following Trump's visit to the Middle East and how markets may be signaling a shift away from safe havens and back to equities. I'm Johanna Bota, and with us today is Forex.com's financial analyst, Razan Hilal. Welcome, Razan.
Good morning, Joanna. It's good to be back here.
So let's start with the dollar. How did the latest CPI prints impact the dollar? And what can we learn by comparing that move to how the euro responded?
Yes, so looking at the chart of the US dollar index and the euro and the overall CPI print, so we've been seeing economic reports, and especially with inflation and growth, mirroring that we saw last in 2020. So we can see a bit of dampened metrics over here, and we can see the US dollar index reacted in a negative way. And especially after it has reached, from a technical perspective, the overall target of that inverted head and shoulders pattern that we see on shorter time frames. So it reached all the overall potential towards the 102 resistance. And with respect to the euro dollar, it traced also the similar head and shoulders pattern formation all the way to its target near the 110.70 range. So when they reached that target, we had that CPI print and we had that overall rebound, and we're still in that range. So we still have key levels, key long-term levels with respect to the dollar and the euro to be able to confirm the longer-term projection for 2025. For now, they are still stable. The euro holding in a retracement pattern below the 115 barrier, and the dollar holding in a positive pattern above the 98 barrier.
Let's move now to the second graph, which is focusing on tech. There was a tech sector rally following the CPI prints, but also maybe in part due to Trump's visit to the Middle East. Can you tell us a little bit more about that?
Yes, so we saw yesterday the visit of Trump to the Middle East had a lot of positive impacts. One of them was lifting off sanctions of key countries, and we also had the deal between Trump and Saudi Arabia and Nvidia. So over here in the region, we have lots of strategic plans towards 2031 with respect to the tech sector and AI. So with that, they set a new milestone with Nvidia with 18,000 units for a first step towards their long-term tech plans with a company called Humane. So with that, we can see more positive impact and more higher risk appetite with respect to the stock market, and we can see it more vividly on Nasdaq as it holds above the 21,000 level and above the neckline of its double top formation that it formed between December and January, which led to an overall downfall across 2025. And now we can see it resurface back above that neckline, back towards that bullish territory above 21,000. Fueling that overall risk appetite into the stock market and a bit away from havens like gold.
So let's talk about gold now. What does this chart tell us about investor risk appetite shifting from traditional safe havens to stocks, and what's driving that move?
Yeah, so as soon as we had the trade talk optimism between China and the US surface into the headlines, we saw the overall risk appetite into the markets shift more towards the stock market and less towards havens like gold. So we can see gold now hovering near a critical support near 3,200. If we do break that support, then we can be falling back towards the 3,000 barrier and possibly below. And as we can see here on the monthly time frame, we can see that gold is still respecting the overall rebound or pullback from the upper border of that channel that has been extending across for approximately 10 years on the gold chart. So it's a critical resistance level we have here. We can see the momentum, the monthly time frame momentum. It's extremely overstretched and overbought, levels last seen in 2020, 2008. So it's probably about time that we might have a potential pullback with respect to the gold chart, especially as we have confirmation with the increasing risk appetite onto the stock market with respect to the latest deals between the US and the globe, and especially in the Middle East, as it was a region with lots of sanctions, and now we have a lift of sanctions and we have lots of positive deals coming on the horizon.
That's great. Thank you, Razan, and thank you for watching. For more financial content like this, please like and subscribe to our channel.